Howdy everyone, it's Mark here and welcome back to the channel. And this video, we're going to look at the Reserve Bank of Australia and why it is that the RBA decided to hike rates by 25 basis points, even though other central banks are either holding or potentially reducing interest rates. And this of course affects financial markets and is something that is core to what we do at Otso Capital, which is the fund management company that I run. If you're interested in investing alongside us, well, I'll include a link to that in the description below because we've had some really good recent performance. So let's have a look at the RBA. Well, the RBA, like I said, recently hiked rates by 25 basis points. The ostensible reason for this is stubbornly high and persistently high core inflation, or in Australia, trimmed mean inflation. The trimmed mean inflation is rather analogous to core inflation, but basically it looks at inflation, removing the really volatile items. Now, of course, the RBA digs a little bit deeper into this and also looks at the inflation, adjusting out for some things such as government-related shenanigans. For example, the government in Australia has been known to try to do cost of living relief, which reduces what inflation looks like. It reduces the number, but does nothing to arrest the growth rate. For example, there might be a one-off decrement in inflation, but then inflation and prices just keep growing from potentially that lower level. This, of course, means that cost of living relief doesn't actually reduce inflation, rather it reduces the appearance of inflation. And the RBA, of course, would see through this and focus on underlying inflation when making its decisions, which is why the RBA has needed to increase interest rates despite the government going out and doing this cost of living relief by trying to reduce energy bills. Now, like I said, core inflation, or at least the underlying inflation, has been stubbornly high. Headline inflation is even worse, being to some extent boosted by what's going on with energy prices, which of course have also been relatively high and have been supported by the Iran war. Now, of course, the Federal Treasurer, who is the one who is managing the economy rather than the Reserve Bank of Australia governor, the Treasurer has been quick to try to blame what's going on in Iran for the need to increase interest rates, and quick to blame Iran for high inflation. For example, Jim Chalmers said, "Today, the Independent Reserve Bank increased interest rates by 25 basis points." So you can immediately see he's trying to shift the blame. He then continues, "Australians are already paying the hefty price for the war in the Middle East, and this decision will make it tougher." Again, trying to shift the blame from the government, which was the underlying driver of the decision to hike rates because inflation was high before the Iran war, to both Donald Trump and the RBA. Then he says, "It will add to the pressures that families and businesses are under at a time of ongoing global instability. We understand that people are under pressure, which is why we're rolling out our responsible cost of living relief." Alright, so two parts there. Firstly, he's trying to pretend that he is understanding and that other people beyond his control, the mean and nasty RBA and that evil Donald Trump, he's trying to pretend that they were the drivers of the rate hike, when in fact it is actually him. He is gaslighting us. And he's saying that he's rolling out so-called cost of living relief in order to combat the rate hike. But the irony is rich on this one, because the cost of living relief, as he calls it, which is effectively cash handouts willy-nilly, those are one of the reasons inflation is so high. It's been rumoured that they're likely to give out another $300 to people, just handing it out, at a time when the government needs to stop spending money. That handout is going to make inflation worse. And before people claim that, well, should we just tax more money to take money away from people? No, we shouldn't. Because money in private sector hands is more efficiently and productively deployed. And when that money is taxed by the government, it's not as if the money stops existing. It just goes from the private sector spending it to the government spending it and then spending it in a less productive manner. So tax hikes are not in any way a solution to inflation and in fact could make it worse. Jim Chalmers then says, "The uncertainty and volatility in the global economy mean there is an even greater premium on responsible fiscal management." I do agree with him about that statement. The problem is, he's not the one providing responsible fiscal management. And he then segues to the budget, saying, "In the upcoming budget, we'll continue this government's record of responsible economic management by saving more than we spend, and by banking on upward revisions in revenue." Basically, he's trying to say that the budget is going to be responsible. But there's also talks. There's just handing out money willy-nilly and doing counterproductive tax hikes, which will be a topic for another time, but the tax hikes effectively would deter investment in innovation and value creation, and Jim Chalmers is making the inflation and productivity problems even worse. So he is the underlying driver of the high inflation and the Reserve Bank's decision to hike interest rates, but is trying to gaslight people into believing that he is not. Of course, the comments on Twitter/X were not especially thrilled with this. For example, one of the most pertinent ones is, "Hi Jim, I noticed that you took credit for the previous 3 rate cuts, so you'll be taking responsibility for the 3rd rate hike in a row, right? The 16th rate rise since you took government." And Ryan Daly makes a valid point. He takes credit when there's a rate cut, but he shifts blame when there's a rate hike. He can't have it both ways. In particular, the government's addiction to continued spending and so-called cost of living relief, which just puts more money into the economy and does not improve inflation. It is itself inflationary when the government effectively puts money into the pockets of individuals. And the government, with its upcoming budget, is looking to do the same, and I'll get to the budget in just a second. So we've got the cost of living relief that really does not actually improve inflation. Furthermore, we've got various government programs, such as the National Disability Insurance Scheme, that are growing at somewhere near twice the rate of the growth in the economy. It's simply unsustainable. The continued spending is what is driving inflation higher and keeping it higher, and the government's inability and unwillingness to rein in spending is the problem. And this appears to be an ideological issue with the current government that seems to feel as if the government needs to be the center of everything and seems to believe that it needs to take money from individuals and then spend it. But the problem is that when the government is spending other people's money, it is inherently less efficient than when you are spending your own money. And it's why the government going out and taking money via taxes, which are going up via bracket creep, and spending the money is not efficient and not good for productivity or for inflation. The other issue is whether the federal budget that is upcoming in May is going to do anything to improve this. And the short answer of this is no, because it looks like the government is going to do a few things that make things exponentially worse. First, it's been rumored they're going to do additional cost of living relief, i.e. cash handouts. And as we have seen myriad times before, a cash handout is inherently inflationary. That is putting money into the economy. It is going to drive more inflation. Secondly, they're increasing taxes in incredibly inefficient ways, particularly increasing taxes on investments. This is a problem because we need more investment to create more productivity. And the government, in its infinite wisdom, has decided to increase taxes, in particular including on growth assets such as startups and stocks. The problem with this is they're focusing on increasing capital gains taxes, and by increasing capital gains taxes, they disincentivize people from investing and taking risk. For example, if you're going to face an even higher tax when you're going out and investing in a startup related to investing in something safe, you're not going to invest in that startup. And that's part of the problem of what the government is looking at doing. Specifically, they're looking at having capital gains tax indexed to inflation. So what would happen here is you're taxed on the real increase in the value of an asset. And that sounds good. You should only be taxed on the real value of the asset. The problem, however, is the rate of the tax. For example, say you've invested $1 in a really safe investment that grows at the rate of inflation and pays fully franked dividends. The fully franked dividends attract a tax rate of about 17%. If the underlying investment grows at the rate of inflation, you'll pay 0 capital gains tax. By contrast, if you invest in a startup that pays no dividends, then say it grows and grows 10x over the course of, say, 10 years. And mind you, you will have invested in a myriad other startups that went bankrupt throughout that time. But say it grew 10x over the course of those years. You'll now be facing a tax rate that is very close to your marginal tax rate of 47%, because it will have grown much faster than the rate of inflation. You inherently see the problem. The more growth an asset has, the more your tax is. So this disincentivizes investments in growth assets. It also disincentivizes investments in things such as construction of new dwellings or value adding to existing dwellings, because you face a higher tax rate when you value add to a dwelling, thereby creating more livable habitation or more rooms or more accommodation than you would if you just cruised and you sat back and you earned income. This is a massive problem that the government does not seem to actually even realize is a problem, because they don't seem to have a mindset of encouraging productivity and investment. rather than have a mindset of the government takes money and then centrally plans things. It is unsurprising that the Treasurer has zero background in economics and comes from a political science background, which tells you all you need to know. So the upcoming federal budget looks like it is going to be a cash splash in unproductive ways, and also a tax hike, which, note, that when the taxes are hiked, it does not destroy the money, thereby being somehow disinflationary, and that would be a bad way to create disinflation by just destroying money and taking wealth from people. Rather, the money is taken from individuals, given to the government, and then spent. So it's not as if that in any way reduces inflation, because someone is still spending the money. It's just now being spent in less productive ways, i.e. via the government. So those tax hikes do not help with inflation, and in fact make inflation worse by reducing productivity. And that is a massive issue, because growing productivity is one of the ways you can get inflation under control. So what are we seeing here? Well, the federal government has a lot of spending. It looks like the spending is going to keep getting worse, and the government is doing other policy levers that undermine productivity, thereby exacerbating inflation and forcing the Reserve Bank's hand to increase interest rates, which is why recently they increased rates, and it looks like they might increase rates yet again. Still, if you've got thoughts about this, you can let me know your thoughts about it in the comments below. And if you're interested in investing in my fund, we'll include a link to that in the description below if you happen to be interested in checking it out. And otherwise, hopefully I see you for future videos as well.